Ladies and gentlemen, Greg Michalowski, July 17, 2014, in the Day Forex Report. Big event today, plane crash in Ukraine. Wasn't necessarily, well, the plane did crash, but the plane seems to be a shot out of the sky. That's a disaster that happened. Fingers are being pointed between Ukrainian rebels and Russia, and as to who did this. Ironically, it comes less than 24 hours after the economic sanctions by the U.S. and EU on Russia. So a state of shock here in the markets, and we saw the market react in the typical geopolitical way. Specifically, we saw bond buying, we saw stock selling, we saw gold buying, we saw selling of the dollar versus yen. In the bond buying, we saw the price move, or the yield move, from about 252 yesterday to about 245 in trading here today, near the low levels going back to the end of May. So yields down. Bond prices up as a result of that geopolitical event. And we also saw the stock market move to the downside. The NASDAQ fell by 141%, equal to the Euro Stock Index decline. The S&P fell by 1.18%, and the Dow fell by 0.94% to the downside. So we saw the effects on those on bonds and stocks. Now let's take a look at what happened in the gold market and also what happened in the currency markets. So I'm gonna move over to gold here, and we'll take a look at the hourly chart. The market after the event started to move sharply to the upside, moving above the 100 and 200 hour moving average, and above this broken trend line. The market is currently trading right around the 200-hour moving average. That comes in at the 1317 level. We're trading 1319 right at the moment on the 5-minute chart. Where's that level? 1317. That's right around here. Now we've been below that 1317 level in trading after the spike to the upside. But one of the things that I do like about the market is the market's holding the 38.2% retracement level. So we are holding against that level, and we see the 100-bar moving average and the 5-minute chart moving up. We're not racing to the upside, but we did take a leg to the upside away from this 38.2. So we'll see if that momentum can continue to the upside for gold in overnight trading. The other thing that tends to happen is dollar yen tends to move to the downside. The yen be bid up in the flight into the relative safety of the yen. We broke through this trend line here, which was our triangle trend line, until we fell below it here and really couldn't close below that level and move back above it. We did hold below the 200-day moving average. That's good. Fell below the trend line. Now looking down toward our low area. The other thing that we did in trading here today and yesterday was in addition to staying below the 200-day moving average, we fell back below the 200-hour moving average in this trend line. That was key number one to the downside here for the dollar versus yen. Key number two was getting below the 100-hour moving average. And then we formed a nice little channel or bottom channel trend line. And when we had data come out in the U.S. Today with Philadelphia Fed index specifically, which came out much stronger than expected, the market moved right up to the 200-hour moving average here and found sellers against that level. That was prior to the move to the downside on the plane news coming out. So traders got lucky up here. It's called trader's luck, when you define your risk and limit your risk, and then have the market go your way. We don't know that an event like a plane crash is going to happen, or a plane being shot out of the sky is going to happen, but sometimes you are the beneficiary of that news, and in this case the sellers against 100 and 200, which is what we typically look for, were benefited by that news. We have been able to stay below this trend line now, and as long as the price remains below that level, the bearishness remains intact for the dollar versus yen. So watch this. I guess it comes in around the 101.33 level currently at the moment. Stay below 101.33, and we're going to be looking for a break of the lows at 101.05, and then we're going to be looking for That's this level right here. I move to the daily chart. And then we're going to looking for the lows for the year. The lows for the year come in at 101.75 and 101.81. That occurred in February. This occurred in May. And so that's where we're targeting. And if we break through that level, then we're going to have the 61 level, which also corresponds with this high right here. So there's a lot going on here between 61, 74, 81, that 20 pip trading range. But as long as the tensions remain, the geopolitical tensions remain, that seems to be a logical place where the dollar yen might start to go toward. Now let's take a look at the euro versus US dollar. You might expect, bordering in the Russia, or the eastern portion of Europe is a little bit concerned about what's going on with Russia and Ukraine, and that may have an impact on the euro. Not to be today. I think we managed around a 25 or 26 pip trading range in the euro all day long. Very little 24 or 25 pip trading range. Very, very little to trade off of. What we did do, if I go to the daily chart here, is we fell below this 43 level, which is a trend line cutting across these lows right here. This trend line right here is a longer term trend line going all the way back to July of 2012. This is July of 2013. And what month is it today? July. We're in July of 2014. So every year we come to this trend line, or we actually created the trend line last year, but this is a year later, and we're back testing that trend line. So we're at a point where it's put up or shut up, or buy or sell, or do however you want to see it. It's time for the dollar yen for the euro versus US dollar to make a move here. Are we going to go and take out this trend line and then go and take out the low for the year, 134.76, or is this the place to buy in the market to move back above that 43 level? That's what traders are going to decide in trading tonight. I thought it was going to be today that they decided, but somehow they managed not to get involved, and we just stayed in that 24 pip trading range. Sterling versus US dollar. We're familiar with this these areas here on the floor side. We have a low here, low here. We have a low here. We went a little bit below it here, but fell. And then we had another low here, low here. We had a low here. We fell below here, and then used the yellow area as resistance. We broke through the level here, just raced through it. And today we came down to that level, bounced, and then fell through that. And this is where we should have gone lower. But did it go lower? No, the market fell a little bit and then came right back and moved back up to the 100-bar moving average. We've been going above and below the 100-bar moving average, so we've been ping-ponging in between these yellow areas. Admittedly, we went a little bit above it here, went a little bit above it here, but look what happened yesterday. We came right up to the yellow area where we have a high, a low, a low, a high. This is where the market bounces in between. So this box right here is where most of the action has taken place, and we're still in that box. So until we break out here, or break above here and break out here, we've got to respect these levels, and we just follow them along. So watch the 90, 93, 96 level for support. If we break through it, look for sellers. Look for this not to happen this time. Okay, if it goes through for a second time in overnight trading, we're going to expect lower levels in the sterling versus US dollar. Okay, let's take a quick look at the Aussie versus US dollar, New Zealand dollar before we shut it down for today. We have the Aussie coming under pressure here in the last few hours, breaking below trend line, moving to the downside, flight out of risk here. Off the daily chart, we're moving down to where the underside of this broken trend line. We came down to that level early in the month, and also to the 100-day moving average. 93.05, 100-day moving average is at 92.81. Keep that level in mind. Finally, the New Zealand versus US dollar. At a point here where I think makes sense. We have these lows. We have 38.2% retracement. Since we made this high right here, this is the highest level, I think, going back to 2011. We actually fell 6 pips short of making a double top there. We've seen the New Zealand versus US dollar move to the downside. Yesterday we fell below the trend line. Today we're testing the 38.2. Tomorrow it might be the 50%. and the 100-day moving average at around the 86.18 that we're going to be talking about for the level. We have to get below this 69 level, which also corresponds with our low right here, and it's just another step in the step-by-step progression of the New Zealand versus US dollar. All right, let's take a quick look at the calendar over the next 24 hours. We have Canada CPI coming out tomorrow. We also have Canada wholesale sales and University of Michigan consumer sentiment. Those are the major releases. We also have the EU current account and leading index for the US coming out tomorrow. Don't see any big, huge market movers in that bunch. My name is Greg Michalowski. This has been a look at the end-of-day Forex report, where we take a look at the review of the day and look at and preview the next day. Good fortune with your trading. Bye-bye now.